Warren Buffett defended the business of Berkshire Hathaway in his annual letter to shareholders, but my next guest may not be swayed. Jeff Matthews is a general partner of Ram Partners and a former Berkshire Hathaway shareholder. Good to see you, Jeff.
Good to see you, Rhonda.
So a little bit of background first. You did hold Berkshire stock for about 7 years, and then you sold your position. Why and when did you sell?
Sold it shortly after he announced the deal to buy Precision Castparts for $32 billion last summer. I thought it was, to use Charlie Munger's favorite word, I thought it was madness.
At this point, we have Warren Buffett defending his positions in a number of stocks like IBM. What is it that concerns you about what's going on with Berkshire Hathaway right now, and concern you in the sense that you're not rushing to go out and buy it?
Right. Well, I think, for full disclosure, I bought it during the financial crisis. I thought that was a wonderful time to finally be able to buy the stock, and never really thought I'd ever sell it. But over time, he developed these large positions in companies like IBM and Amex and Walmart that had, when you think about it, those are very high-cost businesses. Amex is a high-cost card company. IBM's a high-cost technology company. Walmart's a high-cost retailer now. He also owns Suncor, which is a high-cost energy producer. And he owns NetJets, which is a high-cost airline, basically. And that was worrisome to me because Buffett likes to buy moats and own them for a long period of time. And I felt that he started to have this portfolio of investments that were owned moats that were breaking. And that's what really bothered me. And I worry that he's still defending these positions. He defended IBM today, and he'll be defending it for a long time unless it turns around. But I just worry that they own a lot of high-cost businesses, and moats are breaking all over.
The stock did lose about 12% last year. Do you think its days of outperforming the market, it is up a little bit this year, are largely over?
Well, that's why I sold my stock, yes, in a word.
Is there... Go ahead.
Berkshire has transitioned into a company, a business. It's no longer a mutual fund run by this brilliant investor named Warren Buffett. It's a collection of businesses. And by and large, the investments in IBM and Walmart and Wells Fargo actually don't really move the needle as much as investments in these companies. And so it's a railroad, it's an insurance business, it's now a Precision Castparts, a supplier to the airlines. It's a lot of different things, and when you add it all up, it's basically a big conglomerate that's going to fluctuate, I think, with the economy.
Is there anything like the Berkshire Hathaway of old? In other words, is there a way to play Berkshire Hathaway without being in Berkshire Hathaway?
Well, I think you have to look for the new one. You know, who's the new genius out there that's building a long-term track record? I don't have any particular recommendations at the moment. I think most of the people doing that are running hedge funds right now.
Would you look at Berkshire Hathaway again if he did sell some of those large positions and not be so concentrated in a handful of stocks that have some of these issues that you raised?
It's a good question. I don't know. I don't think that'll ever happen. You know, he calls these the big four, the big five. I forget what term he used for IBM and Amex and Wells Fargo. And I don't think he will. He's pretty set in his ways. He's not going anywhere. There's no activist that's going to try to shake the trees at Berkshire. So I doubt that would ever really happen. And if it did, then it would imply that Buffett is no longer the key guy at Berkshire, and if that were the case, why would you even consider owning the stock?
We're going to end on that question. Jeff Matthews of Ram Partners. So nice to see you again, Jeff.
Good to see you, Rhonda.
I'm Rhonda Schaffler for TheStreet.